Welcome to Forkast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and data. I'm Forkast's editor-in-chief, Angie. Let's kick it off with the latest on FTX. There is a glimmer of hope for the now defunct exchange's creditors, but the whole industry is getting ready for another disruption as a U.S. bankruptcy court approved FTX's motion to sell its crypto assets on Wednesday. According to court documents, the bankrupt crypto exchange is now allowed to liquidate up to $100 million in cryptocurrencies a week. The limit may rise to $200 million upon approval from two committees representing FTX customers. The bankrupt crypto exchange owns $3.4 billion in crypto assets, and over $1 billion is in Solana, more than $500,000 in Bitcoin, and almost $200 million in Ethereum. Other crypto holdings include stablecoin USDT and XRP. Now, the news may be good for creditors, but not the crypto markets as a whole, with investors selling off many of these altcoins ahead of that liquidation, including Solana, Polygon, and Aptos experiencing steep price drops this week. Meanwhile, United States' harsh regulatory stance against the crypto industry has found a direct hit in Binance US. The American affiliate of the world's largest cryptocurrency exchange, Binance, has laid off a third of its staff, or more than 100 employees. This also includes its CEO, Brian Shroder. A Binance spokesperson told Forkast the downsizing effort will provide Binance US with more than 7 years of financial runway. It added that the SEC's aggressive attempts to cripple the industry and the resulting impacts to the business have real-world consequences for American jobs and innovation. The crypto exchange has been dealing with growing regulatory pressures in the US this year. In June, the company was sued by the SEC for allegedly violating securities rules. Norman Reed, the company's chief legal officer, has assumed Schroeder's position on an interim basis. While crypto exchanges in the U.S. face tough times, crypto adoption in the country seems to be faring a bit better. The 2023 Global Crypto Adoption Index report from blockchain data platform Chainalysis shows U.S. is now ranked fourth, a step up from its fifth position last year. But it is Central and South Asia that led the way in grassroots crypto adoption. 6 out of the 10 top nations on the list hail from this region, with India taking the top spot. The world's most populous nation has had a tumultuous relationship with the crypto industry. It's imposed heavy taxes on crypto transactions, and the Reserve Bank of India has attempted to throttle the industry. Despite that, Indian citizens are leading the world in grassroots crypto adoption. Ajay Seth, India's Economic Affairs Secretary, also said earlier this week that the country will decide its position on crypto assets in the coming months. Over in Pakistan, rising inflation is forcing people to look for other avenues of wealth preservation. According to the report, low and middle income countries like India, Nigeria, and the Philippines have seen the greatest recovery in grassroots crypto adoption over the last year. That said, crypto adoption has dropped globally since the collapse of crypto exchange FTX in 2022. We caught up with Michael Groninger, CEO of Chainalysis at Token2049. Listen in to what he had to say.
So there's many different use cases, and different geographies have different use cases, where some countries speculation, some countries is gaming, some countries is like really around remittances and ensuring that you can send funds. And in some countries it's more like internal payments, because the established financial system is maybe less good than what you can get in the crypto space.
Sell in May and go away. That is a common saying you might be hearing in the TradFi industry, but it seems that crypto markets are also echoing seasonal trends that we typically see in equities. September so far has seen rather dismal trading volumes for crypto markets, with some predicting that altcoin crash may be brewing. Let's bring in Alex Tapscott to talk about what's shaping crypto markets here. Alex, good to see you. He's the managing director of 9 Point Partners and has a new book out next week on September 19th called Web3, Charting the Internet's New Economic and Cultural Frontier. Great to have you on the show again, Alex. We got a sneak peek into your book. that delves into 11 key themes on Web3. What can readers expect?
I'm very excited about the launch because I think the timing is really perfect for a book like this to come out. Every once in a while, a new technology emerges that transforms the economic order of things in profound and unexpected ways. And so I'm hoping that my new book, Web3, Charting the Internet's Next Economic and Cultural Frontier, will act as sort of a field guide to this new frontier for anybody who really cares about the future and wants to play a role in shaping it.
All right, talking about timing here, September has been a tough month for markets. With impending FTX liquidations and the Fed's current stance, there are worries about the direction of crypto prices here. I mean, we've been talking about it even at the top of the show. Do you think Bitcoin is going to face that September effect that we've been talking about that often affects traditional equities?
Early in the year, we saw Bitcoin rising in tandem with equities and specifically with technology stocks. I think that was a bit of a relief rally after a period where those kinds of investments were down quite bad. And more recently, we've seen the price of Bitcoin diverge from the value of, say, like the NASDAQ, for example. And so the question is why? Right now, we are churning through, the FTX book, as you've just described it, those assets which are coming due. There's still a lot of regulatory uncertainty, notwithstanding some recent wins by the industry in some high-profile court cases, Ripple, Grayscale, et cetera. A lot of people are predicting an end to a rate hiking cycle, which could cause liquidity to enter back into assets. But I do think that all these factors together are pointing to, a potential bottoming in the market that could set us up for, a next cycle.
So what do you think the next support level is for Ether now that it has fallen below the 1600 mark? How is the ecosystem for Ethereum looking?
Ethereum has endured different cycles and has kind of emerged as the de facto platform for a lot of Web3 innovation. And it doesn't mean that it'll be the only platform by any stretch. But clearly, if you look at, developer activity, DeFi, TVL, market awareness, market capitalization, like all these different factors, both fundamental and financial, it's clearly the platform of choice. And if you look even at enterprise adoption, PayPal announces that it's going to launch a stablecoin and it's going to start on Ethereum, despite the fact that there are some limitations to the network.
Franklin Templeton is the latest to join the Bitcoin spot ETF race, yet another traditional asset management company here seeking approval for a BTC spot ETF from the SEC to get approved. That's what everybody is talking about. Alex, you were behind the launch of the world's first Bitcoin spot ETF in Canada more than 2.5 years ago. What lessons can the U.S. learn from Canada?
I launched one of the first spot Bitcoin ETFs in Canada. The 9-point Bitcoin ETF at one point had $400 million of assets under management. And we were actually the first to make that ETF carbon neutral, which is another innovation that has not been achieved in the US yet. So what can it tell you? It can tell you simply that it works. There's no reason not to approve it. We've had spot Bitcoin ETFs in Canada for 2.5 years. We have several issuers. They've been through, pretty violent market cycle where the price declined a lot. The fact that it all worked fine should give regulators confidence that there's no reason to not approve it in the US. What we need is a new set of standards for this industry to grow. Business can't succeed in a regulatory vacuum. The US, if it doesn't come up with something, runs the risk of losing a lead in Web3.
Alex, always appreciate your insights. Always good to have you on.
My pleasure. Thanks for having me.
All right, and you know what? We can't wait to get our hands on your book. All right, time for a quick break, but we will check in on the NFT markets when we come back.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
All right, thanks for staying with us. You're watching Forkast IQ. I'm Editor-in-Chief Angie Lau. All right, Web3 investments may be slowing, but one decentralized metaverse is getting a boost. We're talking about Animoca Brands' Mocaverse. On Monday, the Hong Kong-based blockchain gaming and investment giant announced that it raised $20 million to accelerate the development of Mocaverse. The funding round was led by venture capital firm CMCC Global, along with other investors such as Kingsway Capital, Sky Mavis founder Alexander Larson, Yield Guild Games founder Gabby Dyson, and institutional investors of Coda Capital. Mocaverse wants to empower users to create their own digital identities here, accrue reputation, and earn and spend loyalty points.
A few things that differentiate the Mocaverse is that actually it has a few core concepts. One of them is that we think of it as a DAO of DAOs, meaning it's sort of a large organization, so an organization which organizes other decentralized organizations. Because what we're really hoping for is that Mocaverse basically becomes this kind of sort of identity and culture layer that people can then compose and build experiences on top of it.
All right, since we're talking of the metaverse, NFTs can't be far behind here. Forkast Labs data analyst Yehudah Petscher gets us the insights on what moved the world of non-fungible tokens this week. Yeah, how did it go, Yehudah?
Well, some weeks the NFT segment feels more like TMZ than it does commentary on a multi-billion-dollar asset class. This week, the Forkast 500 again lived in the red, though over the last weekend we did have periods of it coming up to the green. Well, since then, the declines have accelerated. It's driven both by lower prices in NFTs, but also crypto losing value. And when crypto prices do go down, well, it does affect the value of NFTs and it impacts the indexes directly. Last week closed with another 2023 low in global sales, with the week finishing at just over $65 million in sales. That's across blockchains. But we also hit a year low in sellers and buyers and total transactions. Really, we're trading at 2021 levels, but we're still falling and desperately trying to figure out, post-bubble bursting, where do we end up? Where is the floor for this market? And we are just dying to know. And the biggest story in NFTs was an all too familiar one. It was a hack, and this one involved one of the biggest names on the blockchain, Vitalik Buterin, the founder of Ethereum. Vitalik's X account was hacked, and then, like we've come to expect, a malicious link was tweeted out where eager traders clicked on that link, connected their wallet to the website, approved transactions, allowing some of their NFTs to be stolen. Now, this time, a historic NFT was plucked right from a collector's wallet, with CryptoPunk 3983 being one of two punks that was stolen in this hack. Now, this CryptoPunk happened to be the very first publicly claimed CryptoPunk back in 2017, right after the Larva Labs team minted the NFT collection, claimed a few for themselves. This was the first to be claimed by anybody from the public. Well, that CryptoPunk was quickly sold for $252,000. Somehow the original holder remains in good spirits, saying he's okay, just has a shorter runway now. Easy to see why they had that reaction. Their wallet still holds 3 zombie CryptoPunks, which are much more rare than the hoodie punk that he lost. So in the long run, this collector is going to be okay, just short one very historic NFT. The lesson here for anyone who still hasn't learned it: do not buy NFTs with the wallet that holds your prized assets. Use multiple wallets, buy with one, send it to another wallet that you never connect online. Now, we had a lot of big news this week, but it's the news from Bitcoin that really stands out. Starting with that technical story, inscriptions now have a new parent-child upgrade that, simply put, it lets you connect inscriptions on-chain. This should come in handy for building out large collections like we see on Ethereum, but there's all kinds of abstract things that people will come up with. Also on Bitcoin this week, we had a major Ethereum project announce that they're moving from Ethereum over to Bitcoin. That's the on-chain monkeys, and that's right, they're calling Bitcoin home. While we're used to seeing projects move to Ethereum to get more exposure, to get access to that giant collector base, so the on-chain monkey team putting their money where their mouth is, and they're spending $1 million for this move, but it is a good move for them. And finally, Yuga Labs, that's the team behind the Bored Ape Yacht Club, Mutant Apes, The Other Side game. Earlier this year, they released a 300 edition generative art collection on Bitcoin. It's called 12-Fold. At the time, signaling their understanding of what Bitcoin's collectible ecosystem could one day become. Now they're running a weekly competition where the community races to solve puzzles that revolve around that 12-fold art. They're releasing one puzzle a week. The first person to solve the puzzle wins 0.12 Bitcoin. It's around $3,000, so it's not a small amount. So Bitcoin down, but definitely not out. Back to you.
All right, thanks, Yehudah. I appreciate that very much. On that note, let's take a quick break. We're going to get you inside details from one of the biggest blockchain events in Asia this week. When we come back, we're talking about none other than Token2049. You don't have to go there to know what's going on. Don't go anywhere. Stay with us.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast News.
All right, you are watching Forkast IQ. As promised, turning the spotlight to Singapore, which razzled and dazzled with one of the biggest events in blockchain industry's calendar. You guessed right, Token2049. No mood of a bear market there at all. The who's who of crypto industry descended on the Lion City to discuss the latest and most exciting Web3 projects, the state of crypto regulations in the East versus the West, and a whole lot more. We sent Forkast editor and Asia correspondent Will Fee to cover the highlights straight from Singapore.
There was fun, there were games, but there was also a serious undertone to the proceedings at the Token2049 crypto conference in Singapore this week. Bear market gloom and concerns about US regulation pervaded many of the talks. But there are also those who are spotting a silver lining amid the clouds. While things may seem downcast in the US, the further east you go, the more upbeat the mood becomes. But that didn't stop some of the biggest names in crypto letting the audience know their thoughts on the US Securities and Exchange Commission. Gary Gensler, in particular, featured as a kind of special guest in absentia. The SEC's top boss attracted a lot of the collective ire aimed at US regulators.
Can I get a fire Gary Gensler from the crowd? How was that? You can't get a louder one? Okay, still pretty good.
Crypto markets boomed in 2021, went bust a few short months later in 2022, but 2023 so far has proved to be the year of regulations, and specifically US regulations from the SEC. The US securities regulator launched lawsuits against the world's biggest cryptocurrency exchanges, Binance and Coinbase, in June. It also insisted that almost all cryptocurrencies other than Bitcoin are securities. In August, the SEC also took the first ever US legal action against an NFT project. Impact Theory, the California-based media company behind the project, agreed to settle with the SEC, which charged the company with conducting an unregistered securities offering through its sale of non-fungible tokens. Impact Theory paid $6.1 million to settle the case.
And the SEC is losing. Yes, they're losing, like that needs to be stated like in a big way. They're losing major cases. They're not even winning with the laws that they, are the experts at. They lost. Right. Halitas it's a 1944 ruling. Yeah, Orange Grove. It's pre-internet. It's pre-crypto. It's,
just think about it. They are picking the cases. They're essentially making up the laws. They have whole court advantage in terms of they're the government. They always battle with DC. Yeah.
There was clear consensus that the lack of regulatory clarity in the US has created a bottleneck in the industry. While frustrating for industry insiders, that has also resulted in a less stable environment for end users.
And frankly, the highest priority lineup when it comes to crypto regulation, I think should focus on the basics of making sure the assets are safe and can't be rug pulled. Now, investor protections, disclosures, best execution, self-dealing prevention, insiders, all of that stuff is bad. That needs to be handled.
In the meantime, financial backing for once skyrocketing blockchain-based firms has dried up, as has consumer confidence in the wake of the Terra Luna stablecoin platform collapse last May and the FTX Sam Bankman-Fried scandal that erupted in November of last year. The FTX case in particular has attracted mainstream media attention and scorn from the public.
We're not at an end of life for monetary systems yet, but we're getting close to it. And geopolitically and financially and economically, there are massive challenges in the world. Raising of interest rates, inflation, raising of interest rates has made the capital markets environment very difficult. And so we got to a point where so much building hit a top.
$2 trillion has been wiped off the crypto market from the last Token2049 to now. But the crowd still came out in full force, with over 10,000 people in attendance this year, showing that the average investor is still keen on crypto, while outside the US, the industry continues to grow. After all, as many of the panelists insisted, bear markets have proved to be the biggest catalyst for innovation in the past.
We can only control what we can control, which is to build the right products and to make a service on the technology. And to support responsible regulation and engagement so that we can actually make sure we have a healthy environment. And I actually think that this regulatory uncertainty is, decreasing scrutiny over the industry to some extent is actually a good thing, because it sparks discussion. It sparks the discussion around what is right, what is wrong, and it pushes people to actually focus on what actually matters to the customers, which is customer protection, is actually a good thing. And for that purpose, I think regulation and technology innovation is kind of in line.
Pragmatic attitudes toward regulation in Asia have led to breakthroughs in rulemaking and a compromise between governments, legislators, and the crypto industry. In August, token host Singapore became the first country in the world to finalize rules regarding stablecoins, a digital asset class pegged to fiat currency with an estimated current value of $124 billion. Regulatory clarity and favorable tax rules have made the city-state one of the most attractive locations for blockchain businesses from around the world to set up shop.
Here in Singapore, I think we are fortunate to have really strong regulators who are very competent when it comes to blockchains. And so when we look at towards next year with some of these product innovations with more regulatory clarity, I think we have a pretty good setup to make a comeback as an industry.
Could the US soon make a turnaround following jurisdictions like Singapore in Asia toward a happier compromise between regulators and the industry?
I mean, we're talking about the US because this is a big economy and they're quite hostile towards crypto. But I think, it doesn't feel political here in Singapore. It feels like they're making smart policy that's driving innovation here locally. It doesn't feel political in the UK or Dubai or Switzerland where, it feels like they're actually being good government citizens.
Half a world away from Gary Gensler and the goings-on in Washington, D.C., the SEC continued to dominate conversation in Singapore throughout Token 2049. That goes to show that whatever happens elsewhere, the industry is going to remain focused on the US, the world's economic powerhouse, both traditionally and in the new age of digital finance, at least until the country comes up with clearer rules of engagement for crypto. From Singapore, I'm Will Fee, Forkast.
All right, staying on Singapore here, Forkast caught up with Blockdaemon's Asia Pacific Vice President Andrew Varangies. Blockdaemon is a California-based blockchain infrastructure firm, and Varangies said most digital asset innovation is happening in the APAC region.
We have very strong markets, very good regulators, Singapore, Hong Kong, Japan, Korea. So I think this is a real opportunity for APAC to take a really leadership position in the broader digital asset space. So rather than sort of like get caught up in sort of, anything that's not ideal happening, I'm probably very much more focused on how can we build in Asia and take this opportunity to take a leadership position. I think this is really the time for APAC to really double down and move forward and really show what it can do, whether it's from a regulatory perspective, whether it's an institutional perspective, trading platforms.
Bitcoin spot ETFs have been the talk of the town as investors everywhere waiting with bated breath to see when the SEC might give its blessings to more than half a dozen pending applications. And among those applicants is alternative asset management firm Valkyrie. I sat down with Stephen McClurg, founder and chief investment officer of Valkyrie, which is also one of the first companies to have applied for a BTC spot ETF in the US, in this latest episode of Word on the Block. Stephen predicts that a US spot Bitcoin ETF approval may come early next year, and the SEC is taking baby steps to get there. Here's a bit of a preview for you ahead of the Word on the Block conversation. What's next for Valkyrie? And if you're to gaze into the crystal ball of where this space is going to be a year from now, what's your prediction?
I think for the space, I think this Ethereum futures ETF is going to be really interesting. and it's really going to broaden the horizons of who invests, because it's not just a single asset, security like you have with Bitcoin futures. And then I really do believe that we're going to get a Bitcoin spot ETF at least by Q2 of next year. So, but I've been wrong before. I was wrong in 2021, but I do think that the time is right, if not sooner than that.
Hear from Stephen McClurg, an industry player with skin in the game on crypto ETF developments in the US in this episode of Word on the Block that comes out on Monday. You don't want to miss it. Well, promised that we got a whole lot of stuff for you, and I hope we delivered on that promise, because it's a wrap on this week's show, and we really appreciate you for tuning in and joining me and the rest of the team here. Remember to like and subscribe to this video if you're watching us online, or stay tuned right here on this channel, or wherever you are, you're watching from home, trading floor, from the office. I'm Forkast Editor-in-Chief and your host, Angie Lau. Join us again this time next week as we bring you the latest from the world of Web3 and why it all matters. Forkast IQ, get intelligent in Web3.